Hey everyone! Welcome back. Today we're talking about Warren Buffett's top 10 investment principles. You'll want to stay till the end because the last one really brings it all together. But first, let's start with number 10. 10. Avoid market timing. Buffett doesn't try to predict the perfect time to buy or sell stocks. Instead, he holds onto his investments for the long haul. 9. Price is what you pay, value is what you get. A high-priced stock might still be good value if the company's strong, while a cheap stock might not be a good deal if the company's in poor financial health. 8. Reinvest profits. Buffett believes in companies that put their profits back into the business to drive growth, rather than paying it all out in dividends. 7. Consistent earnings growth. Companies that show consistent growth in earnings are often well-run businesses, according to Buffett. 6. Low debt. Buffett prefers companies with low debt levels because they're more likely to withstand economic downturns. 5. Quality management. Good, honest leadership is key to any successful business, says Buffett. 4. Economic moats. Buffett likes companies with a sustainable competitive advantage, like a strong brand name or unique patents, that make it hard for competitors to catch up. 3. Intrinsic value and margin of safety. Buffett looks for undervalued companies. He believes their intrinsic value, based on future earnings, is greater than the current market price. He also seeks a margin of safety to protect his investments. 2. Long-term investing. Buffett is all about the long game. If you're not ready to own a stock for 10 years, you shouldn't own it for 10 minutes. And now, the one you've been waiting for, number 1. This ties all other principles together. 1. Invest in what you know. Buffett advises sticking to your circle of competence. Invest in businesses you understand. If it doesn't make sense to you, you probably shouldn't be investing in it. There you have it, the top 10 Warren Buffett investment principles. As you can see, it's not about quick profits, it's about understanding, patience, and long-term thinking. So, keep these principles in mind as you navigate your investment journey. Thanks for tuning in.